Hello viewers. Goodwill presents stock pick for month of August. We recommend buying ICICI Bank for a time period of 3 to 6 months for a target of 950 rupees. ICICI Bank is India's largest private sector bank by consolidated assets. ICICI Bank Limited was incorporated in the year 1994 as a part of the ICICI Group with the name ICICI Banking Corporation Limited. The initial equity capital was owned 75% by ICICI and 25% by SCICI Limited, a diversified finance and shipping finance lender, of which ICICI owned 19.9% at December 1996. Pursuant to the merger of SCICI into ICICI, became a wholly owned subsidiary of ICICI. Further, we will dig deeper into fundamental and technical analysis of ICICI Bank. Starting with the fundamental analysis part, the company has been performing exceptionally well in revenue front, with its revenue rising 16.2% annually between June 2021 to June 2022, and 3.3% in June quarter. On the other hand, there is an annual rise of 15.2% in profit before tax in current June quarter. Recently, the company has touched the market cap of 6 trillion rupees. Dividend yield provided by the company is also decent, which is 0.60%. Face value of the company is 2 rupees and return on capital employed is 5.59%. Price to book value for the company is 3.42 times. Price to earnings ratio for the company is 20.63. It is slightly higher when compared to industry PE, which comes to 19.63. Debt to equity ratio is 0.89, which indicates company has enough reserves to clear its debt. Company has given good returns on equity, which amounts to 14.8%, and earnings per share is 33.67. Coming to the next part, here we will compare the annual returns of ICICI Bank with Nifty 50. Indian stock market benchmark Nifty has given a yearly return of 7.9% from August 2021 to August 2022. ICICI Bank has performed much better than benchmark index and has provided returns of 20% from August 2021 to August 2022. Now, when it comes to rewarding the shareholders, ICICI Bank is one of the better companies as it has a stable and consistent track of giving dividends. ICICI Bank Limited has declared 22 dividends since May 8, 2001. Recently, the bank has fixed record date of and paying dividend amounting to 5 rupees per share on the 10th of August 2022. Next, as we can see from the graph that the mutual funds have increased holding from 28.85% to 29.19% in June 2022 quarter. Number of foreign institutional investors have increased from 1821 to 1873 in June 2022 quarter. FII have slightly decreased holdings from 43.95% to 43.54% in June 2022 quarter. Institutional investors have increased holdings from 88.76% to 89.10% in June 2022 quarter. That's it from the fundamental part. Now we will move on to technical part. As we can see in the daily chart, it displays three indicators, that is the exponential moving average, pivot points and Bollinger Bands. It can be clearly seen that the stock is trading well ahead of its moving average, which is 798, which is very good sign. The stock has consistently tested the higher end of the Bollinger Band, which is 864 since July 7. Shares of ICICI Bank managed to mildly break above the level in the intraday trade on the 11th of August 2022. If the stock manages to decisively close above this level, it may rise to 883 rupees and then towards the target as per the monthly chart. Further, the stock has been on a strong uptrend on the weekly chart, with the stock firmly sustaining above the higher end of the Bollinger Band since July 18. The chart indicates that the trend shall remain positive as long as the stock holds above 845 rupees. We recommend the stock to be purchased at current levels with an immediate target of 950 rupees. It will face a stiff resistance at 867, which is the recent high made by the stock, but after this resistance is crossed, stock will show momentum and will move towards the target. Stock's 20-day moving average is 806, whereas the 50-day moving average of the stock is 750. The moving averages, along with momentum oscillators, suggest firm control of bulls, as per the daily charts. That's all. For any further queries, we can be reached through contact numbers and mail address mentioned below.